open up Bybit. So I have closed all my trades, made a fresh look here at Bybit to show you the most easy way to, size trades here. And so let's go to one of the trades, for example, today that I shared. Guys, we have Pengu here, right? And this tool here is the trade setup, the risk to reward tool. I also explained this in the beginner section in the server, but in this video, I will tell you quickly how we do it. So this is the trade setup basically. Here, this green line in my colors here, in my setup, is the entry here, guys. This is the entry where we enter the trade. So sometimes it might be below the current price, and then when we share the trades, we will say limit, then you put limit orders here, okay? But sometimes when we share it like this, before this went up, then we say current market price, and this is the entry always here, okay? This green line. Then below here, this gray area is the drawdown zone. The trade can draw down to here, and here, guys, is where our stop is. And on the right side, you see the values. Like this here is the stop here on the right side. The green is the entry, as I said, and this is the target. The the highest target, we might take profits on the way up, like TP1 at resistances, right? TP2 here, for example, and then, but the initial target is the highest one, this one. And I will also explain about taking partly profits in this video, because many members ask how much profit we should take when we say TP1, for example, right? So that's an important question that I will explain in this quick tutorial video as well. So first of all, guys, as I said, this is the trade setup, risk to reward tool. This is in trading view here where you have these tools in the fourth tab here, long position. This is when you select long position, then you have it like this, then you set your target and your stop. You can also right click on this one and then go to the settings and set the values here manually. You don't have to drag. You can also set them here by typing them in. As I said, this will be boring for many of you, but this is really for the beginners and new members, because this is important, guys. If you want to be profitable, if you want to make profits with us, with Earn Elite, if you want to earn with us, you have to stick with this, what I'm telling you right now, okay? And I will try to make it easy as possible. This is the trade setup, as I said. Don't let me repeat again. I think it was clear. Entry, stop, and target, okay? And the most important thing, guys, when we enter trades is that we know how much we risk in this trade. And that is what we would lose in case the trade stops. How much would I lose if this trade goes down and gets stopped? That's what we call risk. Okay, this is the risk. And what we use in a trade, guys, is 1% per trade. And in confident trades, experienced traders can also use 2% or even 3% in really confident, high probability setups. Experienced traders can use up to 3%. So 1 is the usual, what we mostly use, guys, is 1%. And 2 is on confident trades sometimes. And 3 is really if you want to risk maximum. And that's it. We don't risk more than that, guys. Okay? Because if you do that, if you risk % per trade, then I tell you it will not go good for a long time. Because if you have like 3 or 4 losing trades, and then you will have difficulties to recover that. Trust me, it's not good. So usually you should stick with risking 1R. Does that make sense so far? Sound clear for you? Okay. You still hear me, by the way? Yeah, EXO. Hey, EXO. Welcome, brother. How are you? Missed you. You were quiet today. Yesterday, I think. Hope you are good. Yeah. So basically, as I said, guys, this is the trade setup, and what we risk in the trade is 1%. And how do we know um, how we can risk 1% in this trade? What is 1%? Does that mean I use 1% of my funds? No, guys, that doesn't mean that. It doesn't mean you use 1% as margin. If you want to risk 1% in a trade, it means you have to calculate how much margin or how big your position is that you use for this trade. You have to calculate that. And do you know how to calculate that, guys? It's simple. You simply take your funds. Let's say you have a 10K. That's your funds that you trade with, 10K. You divide that 10K, guys, by the stop loss. The stop loss here in this case is how much? 5%, right? Here, 4.999. So let's say 5%. And let's say you have a 10K. That's your balance that you have. So what you do is, guys, you divide 10K. Let me type it here real quick. 10K, you divide that by 5%, which is the stop loss. Okay? What comes out, guys, is logically 2000. That is your position size, guys. What you put in this trade. It is as simple as this. Some people explain it difficult. They come with the difficult formula, but I explain it like this, guys, because it is simple as this. You have 10K, you divide that by the stop loss, 5% below our entry here, right? What comes out is your position size, 2000. Okay? When we talk about spot, so I'm firstly talking about spot. Let's say your stop loss is 1% below your entry. 1%, because as you know, sometimes in the smaller time frame, we share trades like that as well, guys. Scalp trades, for example, on Bitcoin. Let's say we are there and I share, let's go to a short tool, by the way. So let's say I share a short setup like this. Let's say I am aiming for a sweep of the high and I put the stop loss 1% above my entry. Just an example, guys. This is not a trade right now, okay? Just an example. So because the stop loss is 1% above my entry, guys, what do we do? What did we say? We have 10K. And what is 10K divided by 1? Obviously, 10K. This means you can put 10K in this trade, all in. You can go all in with 10K in this trade because if the trade gets stopped, 1%, you would only lose 1% of 10K. Again, this is without leverage. I'm talking about without leverage. Okay, now maybe with the short, it's not a good. Usually we don't short in spot trading, right? But let's say you have no leverage here. Then without leverage, guys, this 1% here means that you can go all in. 10K is your funds, divided by 1 is 10K. You can go all in a trade. Logically, guys, when you get stopped, you only lose 1% because that's 1% below your entry. Okay? And when you have 2%, you don't even have to calculate that, guys. Look, you have 2% stop loss, 10K divided by 2 is 5K. Then your position size is simply 5K. Okay? So you put 5K in this trade, your stop loss is 2%. When you get stopped, then guys, you lose 2% of your balance of 10K. Does that make sense? Is it understandable so far? I think yes. Now, when we have leverage, guys, when we use leverage, what do? We simply divide this by the leverage. So let's say we use a 10x leverage, then we do 5,000 divided by 10. So now we don't use 5K in the straight, but we use obviously 500, which is what the leverage is actually there for. The leverage is to not use your whole balance, but you know, to be able to use smaller margin so that you can open more trades, and also to not put all your balance maybe, for example, on an exchange, right? If you have 10K and you want to trade and you don't want to put your whole balance on one exchange, you put only 1K and then you use a 10x leverage. And then it's like you are trading with your whole balance. But as I said, guys, what's important is how much we use in a trade, how much we risk in a trade, and that is 1%. If the stop is like here, 7% below my entry, and I have 10K, as I said, then we do 10 divided by 7, 10K divided by 7, which is the stop, or let's say 8, because I think it's easier. And what comes out when you make 10K? Let me quickly check. Divided by 8. That is 1,250. By the way, I'm not good in math, guys. I'm not good in math, really. I had to use the calculator right now. And I'm tired as well. So sorry about that. If I sound tired today. But these past days, guys, I messed up my sleep schedule totally. I have to fix that again. Yeah, mostly, brother. And of course, having bad days is also part of it. Sometimes you have a bad day, especially like today when you don't take care of your health, for example, then it can happen quickly that you are distracted and make mistakes in trading. For example, today's hedge shorts were totally trash, I tell you honestly. Today's hedge shorts on BTC that I shared, totally trash trades, totally unnecessary. But yeah, as I said, I have to sleep, fix my sleep, guys. And that's why health is also really important for trading. So ideally, you should do some sports as well, go to the gym and drink water, because the circulation in your blood, if that is healthy, guys, then you have more oxygen in your brain, and obviously your brain works better, and you make less mistakes and catch better trades. So currently, I'm totally messed up. I tell you honestly, guys, I am in such a state in which I was not for a long time. So I haven't gone to gym like 2 months. I didn't eat well, eat healthy. I barely drink any water. Actually, not no water. And I don't ask me why. Usually I'm a healthy guy, but these past 2 months I fucked up myself. Yeah. But I'm gonna fix that. So I will fix that real quick. And I really suggest you to do the same, guys. Take care of your health, drink water, eat healthy, and without that, you can also not be profitable over a longer period of time. Like if I would stay like this, then over a longer period of time, guys, I would mess up many trades. So you have to be really healthy and also have less stress in your life, sleep well. Exactly, Zay Chanta. Exactly. I blindly take your trades. Yeah. Let me fix my health a bit, bro. Inshallah, next week, in 2 weeks, then I will be in good performance, hopefully. But yeah, let's get back to the topic. So, we said if the stop loss is 8%, guys, what we do is we divide our balance 10K by 8. What comes out is 1,250, and that is what we can put in this trade to 1,250. And if this trade stops, then what we lose is only 1% of 10K, which is $100. So we use 1,250 to lose $100 in this trade. Okay? And you always have to know how much you risk, guys, which is 1%, as I said. So you have to know that when the trade gets stopped, you will lose $100 if you have 10K. Obviously, if you have 20K, then that's $200. 1% is $200. That's what you risk in a trade. Easy, right? And as I said, when we use the leverage, then we divide this simply by 10. Then the margin is not this, not 1,250, but 125. Okay, when you use the 10x leverage, then the margin is 125. All right, fam. Let's go to Bybit and I show you something else. The easiest way, guys, and what I do personally, of course, there are some people who do it a bit more with discipline and calculate with the calculator. They journal their trades, and that's a good thing. I did that too some time ago. I did that as well, and it's good to learn and to be consistently profitable. You have to journal your trades, and it's a good thing. In general, guys, if you note down things, it's always good for learning, right? Whatever it is, if you're at your job and you are doing some stuff, and whenever you note down something, you can always reflect later and then, do it better. In trading, it's like that. So if you journal your trades, and there are journals, they are like sheets in the internet where you can type in everything about the trade, why you took it, reasoning, how much you risked, the position size, and how much profit you made. I think brother Dan, who is in the talent section, is journaling his trades really nicely. You can, if you want, you can ask him and he can show you how to do that. And I recommend it really for those of you who seriously want to learn how to trade profitably and not only blindly follow signals. Start journaling your trades, guys. Especially if you want to learn it 100% correctly. Start doing that. It's a good thing. I recommend that. Okay. Dan can show you his journal because he had shown me his, and it's a really good journal. And yeah, he can tell you how to do that and show you where you can do that. Okay. Shout out to Dan. By the way, I'm glad he's here with us. And yeah, on your exchange, guys, you have your dashboard where you trade, obviously, and when you enter a trade, then usually I always trade with market orders. I mostly ape in a trade, then I mark it in. But let's say you have limit orders. Let's say I share a limit trade. Then what you do is you type in the price, right? Let's say 9,000. Let's say here, I want to enter the trade here. 9,200. A long trade, okay? And I don't know how much I should use, okay? Let's say you have a 10K account and you want to know how much you should size your trade. And what did we say on 10K? And how much do we risk in a trade, guys? 1%, right? 1%. So what you do is, guys, you type in the stop loss here. The stop loss, let's say, I tell you the stop loss is 92,000. Okay, 92,000. Now Bybit shows you how much you would lose when this trade here fails. And what do we have here? 33, right? And now you simply set your size so that you risk $100 here, guys. And it sets your margin, which is 0.5 BTC. Okay, this is your margin. Because what did I do? I did type in my stop loss here. And here, expected loss is what I would lose if the trade stops. And 1% of 10K is $100. So now in this order, guys, here, in this order, we have our order set with the entry that I have given, with the limit entry and with the stop loss. You see this? And I have set $100 here. And the reason why I'm showing you this is that you don't always have to use a calculator. I know many of you are, having regular jobs. You are at your job and you trade on mobile phone, for example, right? So what you want to do is you want to do it as quickly as possible. So let's say you're at your job or outside somewhere at dinner with your family, and I do share a trade and you get a notification. So you cannot put out your calculator on your phone and calculate, and you have to do it quickly. What you do is you go in your app, in your Bybit app. Let's say I do market buy. I say entry is current market price. Okay. Current market price, and I say stop loss is 92,000. Okay. What you do is, guys, as I said, you just put the slider so that you have expected loss $100, because what did we say? You have 10K, right? Now the price is changing. That's why this is changing right now, the market price. But when you have $100 here, this is how you open a trade. So I don't want to long here right now, but just to show you, let's go in the smaller time frame. What do we have here? Yeah, maybe we get a small bounce here actually. But I would say it will come down to this EMA, okay, which is the EMA 50 on the 15-minute time frame. It should logically come down to there, but we might get a small bounce here. So let's say we market long here right now. Guys, we did market long. Our stop loss is 92,000. And as I said, because I have set the stop loss while opening the trade here, guys, and it did show me how much I would lose, right, when the trade stops. Simply, what we have risk in the trade now is 1%. Here, let's check it if it's true, if we have the stop loss set, because we have set it. Here you can see TPSL, yes, it's at 92,000. And when this trade stops here at 92,000, what we lose is 1%, which is $100. This is what I wanted to show you guys. You can simply see on the exchange that, the price here when the trade fails, this is how I do it. When, when I open a trade, all I need to know is how much I risk. So when I open a trade, what I risk, for example, $500, for example, in a trade where I have less confidence, I risk 500, which is half size. Sometimes I risk 1K, which is 1R for me. With 1K is what I usually risk in a trade. When my trading balance is like 100K, then that's 1K, right? And that's what I usually, at the moment, risk in a trade, like 1K. But if you have like a 10K account, then as I said, 1% is $100. And guys, that's not less. Really, that's not less. Because if you look how much trades we share and how much good that we raised the stop losses to break even today. As you see, these coins are coming down. Fartcoin already stopped at break even, so we might get an entry down here. I was actually aiming here this H4 EMA 200 anyway. Looks like we are getting there, but that's not the topic, right? Um, the topic, guys, is that we risk 1% in the trades, especially for the new members. I have shown you how to calculate that, and we keep in mind the fees. So it will be, yeah, brother, exactly. The fees is also something to keep in mind. The fees, yeah, definitely. Bybit has fees. So if you calculate that one time, brother, how much the fees is, then you will simply use, you know what I do? I do risk the normal 1% regardless of the fees, brother. I do that, do it like that. So I do not calculate the fees extra, brother. But yes, obviously you also have fees. Like if you want to calculate that as well, you would not risk $100 here. Okay. You would not put the quantity so that you risk $100, but have to put it a bit less when you want to, yeah, calculate the fees. When you want to include that, then you risk like 80, right? And then you open a trade like that. I do not do it like this. I simply, as I said, do not calculate the fees. It's too complicated. Don't have to do that. Risk like it because if you don't do this, brother, if you don't calculate the fees, so what you risk is then a bit more, right? You use maybe not 1%, but 1.1%. I mean, that's okay. You know what I mean? So don't need to make it complicated. So this is how I do it, guys. And as I said, I mostly trade on phone, right? Except in times where I trade more active at home. You know, the times where I traded BTC and shared scalp trades the whole day. Obviously, that's where I sit at my desk, where I have my water besides me, and where I really trade on the desk, where I open up some charts, you know, and trade actively, watch 1 minute charts, use also heat maps and check orders and so on. But that's not what I do at the moment. Honestly, guys, I'm really chill. I spend less screen time. I'm spending time outside with family. As I said, my wife is pregnant. I have to do a lot of stuff at home at the moment. Today I was cooking when I shared the trades. I was cooking. I made kebab at home and I shared those trades on the MacBook while cooking for my wife and my son. That's what I wrote in the main chat. And yeah, guys, this is the way how you can do it in your daily life. The most easy way, you know? As I said, you use the option from the exchange to show you this loss that you would have when you open the trade. And on the mobile app, you have it as well. You go to TPSL, you type in the stop loss, then you put the slider so that you have your 1% here. And you don't have to, let's say, you have like, let's say 10K is a good example. Let's say you have a 10K account, but on Bybit you only have 5K. Your other 5K is on another exchange. So it doesn't mean you use 5K then, the 1% of 5K because you have it on this exchange. You use from your 10K, regardless where your funds are. So maybe you have only 2K on Bybit, you have 5K somewhere else on Bluffin, and then you have 2K on your wallet, Solana wallet, whatever. But let's say 10K is your total funds that you trade with. Okay, then what you do is you still risk 1% here, guys. Okay, I mean, that's the usual way to trade and manage risk. As I said, 1% is a good number to be profitable consistently. Because if you lose a 1% trade, guys, That's not much. You lose 1%. If you lose three of them, you have lost a bit above 3% maybe, right? Then what you do is you get a good trade, a 4R trade, then you recover that. A 4R trade recovers three stop trades. Ideally, if you do not take partly profit, and that's the other topic that I'm going to speak about at the end of the stream. We have like 15 minutes left. Partly profits. If you do not take partly profits in a trade, then guys, a 4R trade recovers obviously three stop trades or even four stop trades. And then you are at break even. With one 4R trade, you can recover four stop trades. It's like that. Yeah. And yes, I mean, I do it like that. On the mobile phone, you have it as well. TPSL, you put your stop loss that I tell you, or what any of our traders tell you. And then you slide here your margin that you have on your trading account here. And then it shows you 1%. When it shows you the 1%, and this is moving right now because I have it on the market as market, right? If I go to limit and I want to enter at 9,200, let's say, TP, stop loss is 92,000, as we said. Now this will not move. This price here will not move because why? Because we have a price here that doesn't change. We will enter limit order at this price. So now I put the slider until I have expected loss. In case the stop gets hit, expected loss is 100. You know, yeah, 100. This is how I do it on a phone, guys. This is works really, really nicely. And if you, and I think most of you have a daily life, you have something that you do, you go to your job or whatever, you have your daily commitments. Obviously, guys, you cannot put out your, as I said, your calculator and calculate precisely, you know, which is what you ideally should do actually. Okay, if you journal your trades, etc. Ideally, you should be exact, but I know it is not possible in a daily life. And this, what I have shown you here, is a simple method to still be at least, yeah, with some discipline to be profitable consistently. But if you do not care, if you just think, oh, Muro shared a trade, Wave shared a trade, let me ape in the trade. What do I risk? I don't care. Like, you know, you simply set the margin somehow and say, okay, I'm risking here half of my account, whatever. And no, guys, that's not working well. Let me close these orders here. That's not working well. You have to know exactly how much you lose in a trade in case the stop hits. You have to know that. Okay, if you ape in a trade, especially also, guys, if you do not set your stop loss while placing your trade, that can be very, very dangerous. I think a member said that he aped in a trade in 3 without setting the stop loss. You can do that at the same time, right? He didn't do that. He aped in a trade and wanted to set the stop loss later, which is something that you can do. I do that sometimes as well on the mobile phone. It's easy. You open the position, guys, okay? Then you go here to this setting and then you place your stop loss quickly. You can do it quickly after the trade as well. But if you know that you don't risk a lot, if you don't risk a lot, you know, and if you place it like this in advance and know what you are risking, then that's better. This is why I suggest you set your stop loss while placing the trade. And also what you do is you risk 1%. Or guys, let's say you trust the trade really a lot, then you can risk 2%. I do not risk 3% to any of you. If you are, yeah, if you are new and you want to first learn and get a feeling for all of this, then I do not recommend risking 3% in a trade. One or two, if you are really confident, you can risk 2%, which means that if you get a 5R trade, then what you will then, one moment, if you risk a 5R trade, if you got a 5R trade and you risk 2%, obviously then you have 5 times 2, which is 10% gain. Okay, then you have a 10% gain on your account, which is great. On 10K, that's 1K. So then you have, with a 5R trade, then you have 1K profit. If you risk 2% on and get a 5R trade, that's a 10% gain. And this is what I'm telling you guys, that's not less. Really, risking 1% is not less. If you do that with a 10K account, risk 1% like this, $100. Okay? As I told you, stop loss is here. We set this so that we risk $100 in this trade. Fam, okay? Let me put it on market again. Let's, yeah, set the stop loss above this here. I want to make an example trade, short here, but I'm sure it will go up then. I think it will go up. Scam pump first. Let me check. Yeah, we'll likely make a small scam pump before it goes down more. Up to here and then, yeah, then down. That doesn't matter. This is just to show you anyway. So don't have to be right now in this trade. Just want to show you. Let's put our stop loss here below 92,500, okay? 92,500. This is how we set the stop loss. Here, TP, SL. And I said you move the slider until you have the $100 there on the 10K account. If you have a $30,000 account or $35,000 account, then you slide this to 350 because that's 1% then, guys. Yeah. Right? And the leverage is already set here. The leverage is 25 here, okay? It shows you here according to the leverage. If I change the leverage to 10x, then it will show you the margin according to that. Okay. Let's say you want to risk 1% right now with the stop, then we have already set the leverage, and now the slider, if you move it, it will show you here according to your leverage the loss that you would have in case this trade stops. Okay, guys? And as I said, 1% is not less because on a trade like Wave, for example, shared here recently. Can I go? Yeah, in the channel, of course. So Wave shared a nice BTC long here. How much is this? Or Ethereum? This is 5R, right? 5R trade. Killer trade, by the way. Wave is absolutely nailing it again. A really great trader. Shout out. Is he in the chat? No, I don't think so. But this is a 5R trade so far, which means if you had risked 1%, guys, and ideally you didn't take profits up to here, okay, then that's a 5% gain on your account, guys. Your 10,000 account becomes a $10,500 account just with this trade. Now imagine you catch 3 or 4 trades like this, which is 20R, then you have already 12,000 ideally. Now imagine guys, with all the trades that we share trades like this on a daily basis, right? Obviously we also lose, right? But we win more often than we lose, okay? And when we make, for example, 10 or 20 hour profit in a month, that's great, guys. Or isn't it? That's great. That's more than enough. Look, for example, how much total hour we have in November, for example. Yes, obviously they are calculated. The best case, for example, if you had kept the trade without considering partial profits. But even if you take partial profits, guys, for example, if I share 40 hour in a month, even if you take partly profit, you will be able to make 10 hour in that month. Okay, if you do not hold the trades up to the highest target, then that's still a 10 or 20 hour, which is great because 10K, that's 1K, guys. That's a nice side income. You don't need more than that. If you trade 5K, 50K, a 10 hour in a month is 5K. Is enough to live, in my opinion, in a month for life expenses. 5K or 10K. 10K is already very good to live very comfortable in a Western country, you know? And you don't need more than that, guys. If you want more than that, for example, you want to get rich fast, then trading is not for you because in trading, what's realistic is 10, 20 hour in a month. That's already great. Okay, that's really really great. Um, yeah, it can be more sometimes in a really good month when you have a bull market and you hold something, obviously then that's something else. That's another topic. But normal trading, guys, with risk management, 10, 20 hour, regardless of market conditions, that's what you can do consistently. And if you do that, you can calculate, guys, if you make 10 hour in a month, you can calculate how much time you would need with 10K to make a million. And I tell you guys, that's not a lot. That's not too much. It's like 2 years or so. If you use real discipline and make 10 hour each month, it doesn't take a lot time, too much time to get up to 1 million. Really, you can calculate that if you don't believe me. All right. But obviously, you cannot always be with discipline. Sometimes you fuck up. And because of that, many traders, most of the traders, actually more than 90% of the traders, do not make it and are not profitable. It's not because they are shit traders or they are dumb or anything. They simply do not have the discipline to stick with this 1% risk management thing that I tell you. This is really, really important, guys. Because let's say you make profit 3, 4K, 5K, whatever, which is good for you, but you don't use the 1% risk management, you can easily lose that again. You have a losing streak and you will have lost that again. So basically, you trade it for nothing. But if you use the risk management, that won't happen. It sounds little, but yes, exactly. Broadcom retesting again, H1 EMA 200. As I said, I think this is overused. I am personally looking at here the H4 right now. And what does overused mean? Well, simply, brother, it retested this so many times right now, and especially today. Um, this EMA, starts to trend down. So it might hold here, yeah, it can hold here. But um, we had a really hard rejection here, really hard at this supply zone, brother. So I would say it comes down, sweeps some stops here that people placed here and here, and maybe even this one. When it sweeps that, so you have to think like that, brother. People have placed their stops here and they are They want to catch that up move, right? So it's logical that these zones, these levels here, get swept, right? Like here. And yeah, that's why I lowered the stop today because I thought this here one, this upper one might get swept, this one here. Before it had pumped today, I thought maybe they sweep this one and then pump it. But right now, because it's already rejecting, it's more likely that it comes down to this low here, to the stop that I shared. It's probably gonna sweep that, which is where the H4 EMA 200 is. So guys, I hope it was helpful with the risk management and how to risk 1% in a trade, which is very important, especially for the new members who watch this stream later in the video form. Please stick to that, guys. I promise you, if you do that and use our trades, you will be profitable at the end of the month, and you will yeah. Also, one moment. You will be profitable, guys. The fees that you have paid for the membership here, you will make that and much more back, so it will be worth it. And as I said, if I share 40R or 50R in a month of trades, and even if you take partial profits, which our trading tracker doesn't calculate, which is something that I want to change. You know, I want to track trades in a way uh, that we also calculate the uh, partial profits that we have taken. But for that, the traders must mention how much they take off. Like I have taken off 25% here. And that's a bit complicated, but my goal is to do that. Okay, so that we do not have like 50R trades at the end of the month, but 10, 20 realistic numbers. And for that, we would have to say TP1 take 25% off. And the good thing is, guys, also on exchanges like this, on the mobile phone at least, you can close a trade easily 25%. You want to close a trade, you click, you move the slider, then you see that you would close here. You see this? 25% of the trade, and then you close the trade. Then you have closed 25%. Uh, that's how you can do it. On the mobile app, for example. When I have an open position, guys, I see TP1, then I click on the 25% slider and market close 25%. So here in the settings, you have that. When you have an open position, let's say we open a position here right now, right? And then here, position, you have the setting here, right? And now I want to close part of the position. One moment. Where do I do that? Here on the platform. I have forgotten how to use this platform actually, because as I said, I'm mostly on phone, but I'm sure. Anyways, what you can do, I guess you guys know what I mean, huh? Don't have to show this because I'm tight right now. You can close the position here fully, I see, but on the mobile phone, you have the option when you click on the option here where you set your TPSL, or when you go to close trade, then you can set the slider so that you close 25% quickly. So that's how you do it, guys. Or 50%. And market on the right. Yeah, there's market on the right here. Slider that I'm speaking about on the mobile app. When you click on the position, you can move the slider so that you close 25%. You know what I'm saying? I can do it from partials. Yeah, brother, yes, click that. Oh, yeah, exactly. That's how you do it, brother. Then you, at TP1, for example, I close 25% of the position. Then at TP2, I again move the slider to 25%. Again, close another 25%. And then at TP3, for example, if I'm happy with the profit, I close half of it, 50%, you know? And then I leave a small bag sometimes for the ultimate target. And that's it. That's how we do it. It's not complicated. And if you do that, at TP1 I've taken 25 off. At TP2 I have taken again 25. At TP3 I have again taken 25 or 50. Then later you can calculate easily how much real R you made in the trade. That can be calculated then. Yeah, how much? 2 TP. As I said, brother, look, as I said, ideally in a good market, when we expect big moves, then ideally you shouldn't take partial profit at all, right? For a trade like Wave has shared, that Ethereum, that 5R trade, ideally you should not take profit for the ultimate target, then you will have the full R. If you take partial profit, then you won't have the big reward that you would usually have. So it is not recommended to take a lot off in a good market where we have confident trades. For example, the market is bullish, we expect everything to go up. And I do not suggest to take partial profits at all. But let's say we say TP1 and the trader says, take some off, I suggest it. And as I said, ideally, I want to make it a standard that we say how much we take off. That would be the best, I think. Take 25% off TP1, for example. So that would be ideal if we make it like that. But let's say we have a choppy market, brother, really choppy market, and it is really hard to catch even winning trades. So then obviously at 1R you can close half of it, for example, because we know the market is choppy, we might round trip in a sideways environment, for example. For example here, okay? So in a sideways environment, when we share trades here, and you get a 2R, then it's obviously good to take more off. When you are here at 2R, you can take half off, because you have resistance here. And we think about the market, that the market has more sideways. Then it's good to take a lot off. Even 1R profit is good enough to close the full position in such bad market conditions, guys. Even 1R is good enough at TP1 to close the full position when we have a difficult market. And you will see that when our traders start to have more losing trades, when the market is really bad, then you will see that we will take profits more often. And then you close the whole position at 1R or take half off. But in a good market, when you see us nailing the trades, we have an easy mode. It's easy for us traders to share 5R trades, 6R, 7R trades. Then ideally you should take as less as possible off, guys. 10% maybe at TP1, 20%, like that. Does it make sense? Should we move SL to break even when we take TPs? No, only when the trader says that explicitly. When you take partial profits, brother, most of the times, for example, you take partial profits at 2R, then you already have done something like paying the stop loss in case the trade goes down and you get stopped. That partial profit taking, in many cases, you have paid the stop, right? By taking partial profits. But you have given away the profit, obviously. So sometimes a trader might not want to raise the stop because he expects the price to come back to entry. So he has seen that the price has gone up. He also said take partial profits, but he might expect the price to come back down to entry and jump up from there. So if a trader doesn't explicitly say raise stops to break even, I suggest do not do that. But it's up to you. If you do not want to give profits away, round trip, you can do that. But the next day, then you might find the trade at 10R and you have missed it because you have done something which the trader hasn't suggested you. You know what I'm saying? Of course, it can still happen if the trader says raise stops to break even. It can still go up to 10R after that. But at least it's not your fault then. The trader has told you to do that. Then, yeah. Yeah, yeah, of course, brother. That's a good thing. Because if the trader has not told you to raise the stop to break even, right? And he expects actually the price to possibly come back to entry, and you have taken partly profit at 1R or 2R, and the price comes back to entry, that's great for you because you can still add at the entry, so you have full size again, and you have taken profit, and the trade is still valid. So you will make the profit twice later. That can happen many times. So as long as the trader doesn't explicitly tell you raise the stops to break even, you don't have to do that. That's not a standard thing in our server. The only standard thing here is that the leverage is 10x. That's the standard, except if a trader says, guys, use a 5x leverage. And you have to lower the leverage. A trader might do that because you might use a wider stop loss. Okay, for example, if a trader uses a stop loss that is 10% below the price, below the entry, then he cannot let you use a 10x leverage. He have to tell you use a 5x leverage, for example. He has to mention that then. This is the only standard on this server that the leverage is 10x. So when a trader doesn't mention any leverage, nothing, the standard leverage is 10x. Okay? Or can we just add another entry to our first entry? Or can we just add another entry to our first entry? Or not a good idea? I didn't understand the question, Amine. Or Amin. Amine. Or can we just add what 25 of deposit or 25 of the rest what you leave? One moment, guys, let me read this. Yes, of the position. When we close the position at TP1, for example, what I mentioned is 25% of the position. Obviously, that's what we close. What I suggest to close at TP1, for example. Okay, 25%. And again, guys, as I said, in a good market, when you see our traders nail 5R trades consistently, like now, like we have these days, then I actually suggest to not take much off at TP1. It's better, as you see the trades to 5R, then it's obviously better to not take profits at TP1. Or if you do not take much off, 10, 20%. And then at 3R, 4R, you can take more, or 50% or more. Yes, this question, I didn't understand it. Like re-enter with our profit after TP1 if price comes back to entry. Okay, brother, look. The important thing here is that you do not risk more than 1% in the trade. Let's say you have taken partly profit, right? And the price comes back to entry. You do the same thing that I have just explained. You add size to the trade and look how much you would lose in case the stop hits. And that should not be more than 1%. Let's say you have taken 50% off and your risk was $100. Logically, your risk becomes $50 because you closed half of the position. Your risk is now $50 in case the stop gets hit. You can now add the same size again so that you again have 1% risk in the trade. This is how you can do it. Regardless where you enter, if you enter at the entry or if you enter higher, if you DCA, regardless where your entry is, do not risk more than 1% in the trade. After you have taken partly profit, then brother, let's say you have taken half off, now your risk is 50% instead of $100. Now you want to add, logically, you add the size that you would that you have. Because you have taken 50% off, you add the same size at the entry so that you would lose 1% in case the stop hits, brother. And as I said, maximum in confident and really confident trades, 2% maybe sometimes. But as I said, guys, really to beginners who are new in this channel, who don't know the traders, because every trader has a different style and approach to trading, there are traders who have a high win rate and traders who have a low win rate, but therefore catch um, high R trades and are profitable. Because I personally know traders, guys, who lose 80% of their trades, but they are profitable. Why? Because they are aiming for 10R, 20R trades. And if they catch a trade after after losing 7 trades, they are still profitable. You know what I mean? And you have to understand the traders. Every trader is different. Until you have a feeling for that, until you get to know the traders, the approach, the different approaches, I suggest to not risk more than 1%. Because imagine you have a trader with a win rate which is low and you risk 2% and he loses 5 trades. He has a bad day, he loses 5 trades, which is not a biggie for him because the next trade he will catch is 10R, but you might miss that next trade and then you have to recover 10R that you have lost. You know? So this is why I suggest, guys, stick with the 1%, maximum 2% if you have a trade that you fully trust. But do not do that all the time. Do not risk 2% all the time. And I'm speaking to the beginners here, guys. Experienced traders who know what they do, they know what they do anyway. Okay? We are over the time, already 1 hour and 15 minutes. Do you have questions left, fam? What if you announce more than one trade same time? Brother, I do that. I announce more than one trade mostly. And sometimes I have 2 or 3 R risk at the same time in trades. But I do not risk more than that. So yes, I do risk 3R sometimes in trades. And I also mentioned that. And sometimes I say, guys, I like this setup, but I don't want to long it now because I already have too much risk. Right? I say that. For example, I have 3 longs. Then I tell you guys, hey, this trade is really good, but we already have this trade and we have 3R. That's enough risk for the current market condition. We don't have to risk more. Mostly I have like 2R, 3R risk at once, guys. Okay? And that's obviously not the best thing to do because market most of the times moves together, right? When Bitcoin fucks up, then you have 3 stop trades, which is why today I have shared the hedge BTC, which was trash by the way, but that's why I did it. Because if Bitcoin had went down, then we would have 3 stopped longs with the altcoins, and the Bitcoin hedge would have recovered that. But usually I'm not that messy, guys. I usually explain and say go half size in this hedge, for example. Today I didn't say that. Hopefully nobody went big in the hedge shorts and have used the same size, guys. As I said, 1% is the standard risk that we have on the server. That's the standard risk that we use, 1%, and the standard leverage is 10x. You're welcome, brother. Also from other guys, yes, brother, I really suggest to join the streams. There's really a lot alpha in the streams. Yeah, today's stream was boring for many of you, I can imagine, who know already risk management, but this was important for me to make one time like this. Maybe sometime, one day, we can repeat this. But I think this was an easy approach, especially here on the exchange, to look how much you would lose with the slider. You know, there are traders who teach people how to trade, and then they show you the formula. You have to They show you complicated formula, not like I did with the your balance divided by the stop loss. Really easy, right? But they use the complicated formula and make it sound like it's difficult, which is actually not difficult, guys. And they do not, make it as easy as possible for you. I think you know what I mean, right? So in your daily life, you cannot put out your textbook, calculate everything precisely like some teach, and then do that like that. It's not possible. But here it's an easy approach how to do that. Set your stop loss while opening the trade, move the slider, look that you risk 1%, open the trade. That's it. Simple. That's how what I suggest to you, normal guys. And to those of you who have more time, like maybe you don't have a job or you really trade for a living, you have you have nothing to do except trading, then what I suggest is to do it more precisely. Use a journal, I think in English, right? And to do that with discipline. That's what I actually suggest to people who want to do this really seriously and perfectly. And as I said, we have traders who do that. And sometimes in phases where I trade more active at the screen, I do that as well. But at the moment, guys, as I said, my wife's pregnant. I'm really busy. I have additional tasks. I'm cooking, cleaning sometimes the house, and picking up my son from school, bringing him to school, things like that, which normally my wife takes care of. She cannot do that at the moment because she's in her ninth month. Next month we expect the baby. And also I'm renovating the house because of the new baby. Those of you who have kids, you know that. Women always want new stuff when baby come, change the rooms and so on. So at the moment I'm a bit busy. That's why I'm not trading at the desk as usual, guys. Have patience with me, forgive me, but I think we have traders here who do that, who journal trades, and don't be shy. Talk to them, ask them. They can tell you the best platform where you can do that, and so on. Okay. As I said, Dan has a really nice journal. Check it out. And yeah, glad to have him here. By the way, he shared a really killer trade already today. Just like everyone else, Wave has killed it. Always, and Iabi, actually everyone. And really nice to see days like this. Hopefully, this is the quality that we keep and improve even more. And yeah, that's what we are here for, guys. And thank you again for supporting our work. Our goal is to have a community, really, guys, where as many people as possible benefit from. So, our team members, you guys, the members in this channel, we want us all to earn together, to learn together and earn together. This is what Earnerlead is there for. And we also, guys, we have affiliating. And those of you who grow their social accounts later, you all have to a possibility to invite people here and get a 50% share as well. Repeating, as long as the members stay, you will always get the 50%. I mean, it doesn't get more fair than that, right? So we give you something, a product that each of you can sell actually to friends, to people, or on social media, and you get half of it, guys. This is the product, Earn a Lead, one of the best trading, yeah, signal channel and also education. Are you gonna trade during the holiday? Um, Let me think right now. Yeah, during the holiday, I am. Yeah, I'm active. I will be active. But we do not have Christmas in Islam. I'm a Muslim. I wish you all a good time, really. But we Muslims, always when you have Christmas, we wish you the best, by the way. But we are always like the outcast, you know? You are at home, all together, having a good time. And we are not like that. We are normal. and sometimes you are jealous. And look, people are happy at home. They all came together, all relatives, which is nice, obviously. But we don't have that, brother. And we Muslims have other. We have Eid 2 times in the year. So Christmas for me is I'm home, obviously, and I'm active. Yeah, because I'm not busy actually. So I'll be yeah active, brother, over the holidays. But next month, middle next month in January, we are expecting the birth. So then some days, a few days, maybe 2 or 3 days, I think I will be not active. I'll be at the hospital maybe, take care of the kid, of my son, while my wife is delivering. Obviously, I will not be active for 2 or 3 days. And after the birth, I should be back. Other than that, brother, the holidays, I'm here. I'm here, active Muslim, but just asking if the market will be good to trade. Yeah, I think it will be good. Usually, that's a good time. The new year is. I remember, brother, in 2017, that was where we had the pump to 20K. So the first pump, the first major pump in bull run, that was, yeah, in the holiday 2017, 2018, was amazing. Yeah, and a few days after that, everything dumped. But that's, yeah, that's another story. So from 10, 20K, it dumped so hard, brother. The next day, I don't remember. But then it went up again. So as you know, hope everything will be good. If your wife and son, bro, wish you the best. I mean, thank you, thank you. I appreciate you all. Thank you very much. But we are now, yeah, 25 minutes over time. Any more questions, fam? I have to fix my sleep schedule. As I said, we'll try to go to bed early today. 2018. Yeah, was it? No, brother. Oh no, in 2018, it was below 20K. Yeah, it was below it. It went up later. The bull run in 2019, 19, I think, 2020, it started going up. I cannot even speak right now, guys. So I end the stream. If no more questions, I wish you all a good evening. You're welcome. No worries. Yes, brother, I will rest. Really, go to bed early today. Wish you all a good evening, okay? Thank you for joining and have a good evening. See you guys. Bye bye.